This is Phil Yaeger of Yaeger CPA Review, and I'm here with my partner in crime, Ron Premuroso of Yaeger CPA Review. And Ron is there in beautiful Montana, all right? And I am in, well, not really beautiful, Maryland. But anyway, we're going to do a webinar for you here today, all right, on two parts of the exam that is changing July 1st of 2021. Now, today, we're just going to cover the changes to the FAR and the reg, all right? And within a day or two, all right, and look for it, we'll be also doing the changes in BEC and auditing. Well, we're working on that. We're trying to get that done. And please look for it on the internet, okay? All right, so anyway, let's talk about the summary of changes to the FAR exam effective July 1st, 2021, Ron. All right, let's put that up on the screen. Oh, terrific there. All right, now, the first topic, all right, is the topic related to discontinued operations, all right? And guess what? It was removed, all right? We don't have a separate topic for discontinued operations, but they added it as an example to the multi-step income statement, all right? Now, Ron, in our book that we've actually redone for the new exam in financial, can we look at an example of that? All right.
Absolutely. Here it comes up on the screen. There you go.
According to this, I just paused. All right. We're recording. Go ahead. Continue. I'm sorry. All right. Let's look at that discontinued operation stuff.
Yep. Here it comes up on the screen.
All right. Ron, you want to talk about this?
Yep. So here's your basic multiple step income statement, right? Phil, sales, cost of goods sold, gross profit, operating income, blah, blah, blah. But now they're asking us to integrate the discontinued operations section into the income statement itself on the bottom. So under GAAP, right, we would show here income from continuing operations before income tax expense, then income tax expense. And here it is, right? Income from continuing operations. Everything we have here in bold relates to the continuing or discontinued operations, all right? Next comes the discontinued operations. And please remember, under GAAP, you must show the loss from discontinued operations incurred during the current year and any income tax expense or benefit. So if this was a gain, this would be income tax expense. If this is a loss, which is what we're showing here, there would be a tax benefit, okay? So
Ron, how was it shown before? How was it shown before?
Well, it's always been shown here, Phil, under GAAP, okay? But in the AICPA blueprints, it was kind of its separate topic and it didn't have it merged together with the multiple step income statement. So what they've done is very smart. They've merged it together with the traditional income statement, okay?
Okay, well,
and then finally, Phil, it ends here at net income, okay?
And there's your, right after that, there's your other comprehensive income items.
Correct.
There haven't been any changes on that.
No changes.
So this is the combined statement where you have the income statement and you combine the changes in other comprehensive income for the period. And that gives you what, Ron?
That gives you final net income after comprehensive income.
Okay. All right. Let's go back to the second change here. All right. The second change is the topic on going concern. All right. Now, that was removed from FAR, but it's still included in auditing, where it will access identifying going concern factors and indicators. All right. How did that change exactly, Ron?
Well, I mean, the accounting part of it used to be addressed here in FAR, but it's not necessary. It's not required. It's all identified in the auditing section, right? What audit procedures you need to perform in identifying a potential going concern situation and what audit evidence you need to satisfy yourself as to whether or not you truly as an auditor have a going concern situation where you have to put that in your opinion or not as a separate paragraph.
All right, the third one, Ron, talks about the topic on compensated absences were removed, all right? And now the content is limited to talking about vacation accruals under payables and accrued liabilities. Really, how is that a change, Ron?
So they eliminated those accruals you may have to make, Phil, for other types of compensated absences. Okay, so it's limited to vacation accruals. So sick is not in there, for example, right, Phil? You don't have to make an accrual for sick pay or any other type of an arrangement with employees where they have a compensated absence other than vacation accruals. That's it.
Okay, and Ron, you know that I used to teach number 4, and
Phil, I know this breaks your heart, Phil.
This did break my heart because I
This
think
is
I
a
was one of
goner.
the few people who really understood those pensions, those defined benefit pensions plans and the defined benefit post-retirement plans. Well, you know what? Starting July 1st, 2021, all information with pensions has been removed, all that stuff, you know, the components of pension costs, and then also the post-retirement benefit costs. That has all been removed. But they did leave one area, didn't they, Ron? All right, because it didn't show being removed. Wasn't that the financial statements dealing with defined benefit plans?
Yeah, that's still there. But Phil, the reason they eliminated this, and I know it breaks your heart, but they eliminated it because, right, most of these benefits in the calculation come from an actuary, right? Remember, the exam teaches to a senior level, right? Is a senior going to be able to work with actuarial statements and be able to really calculate the amount of pension expense, you know, following GAAP? That's not really a function that's typical, okay, at that
All
level.
right, Ron, can you speak up a little? Your voice is sort of, I don't know where your microphone is, okay? All right, now, this is one, all right, anything mentioning the difference between IFRS and generally accepted accounting principles are removed, all right? So now you don't have to know any differences between IFRS. For example, IFRS allowed LIFO for inventory, all right, where US GAAP does not. Is that correct, Ron?
No. LIFO did not allow, I'm sorry, IFRS did not allow LIFO.
Oh, I'm sorry. You're absolutely right. I said that wrong.
Whereas US GAAP allows
it.
LIFO.
I'm sorry. But don't worry about the rules of IFRS. You just have to know US GAAP. But I want to tell you, if you look at this thing, it says effective July 1st, 2021. If you're taking the exam June 30th, they can still ask you differences between IFRS and US GAAP. And you say to yourself, oh, wait a minute. Why are they doing that? Doesn't make sense because it says the changes become effective July 1st. And when they say July 1st, they mean July 1st. So don't come crying if you take it June 30th and say, you know, they asked me a big simulation on the difference between IFRS and GAAP for various things, okay? It's just because they told you these changes did not occur, will not occur until July 1st, okay? All right, now also, number 6, and the last one, journal entries for derivative financial instruments, including swaps, options, and forwards, and also cash flow and fair value hedges are no longer tested, okay? All right, hey, that was a tough area, derivatives.
Very tough.
Yeah, and usually people get that more than we do, are finance majors, right?
Yes, and also, again, Phil, right, senior level is what the exam's aimed at. It's very unlikely, okay, except in exceptional circumstances, that a senior would be involved in the journal entries for those complex subjects.
But will they be testing, is derivatives on the BEC part of the exam?
Very, very small amount, Phil. Only as it pertains to managing foreign currency. That's it.
Okay, all right. So other than that, all right, there's no other place they can test derivatives, right?
No other place. Hey, Phil, what do you notice in here? Everything was what? Either a move or a deletion, right?
Right.
Are there any new topics here?
No.
Nothing, right, Phil?
No.
Nothing. Very, very amazing, right? In 2 years, no new topics on FAR have been added to the exam. Okay?
But Ron, when we get to the changes in auditing, all right, they did accommodate what you just wanted. Changes in auditing blueprints, right? New blueprints.
And
we'll let that go,
too.
and we won't give you a heart attack until we show you that presentation.
And that's why we're doing it separately too, Phil. It's much easier.
Ron, the next thing is the regulation. Now, Ron really always says, Phil, I don't understand the regulation. I don't want to become a regulation specialist. Okay. All right. Now, let's look at these summary changes to the reg exam effective July 1st. It says here, limit the scope of the content to the basic concepts related to debtor and creditor relationships, bankruptcy and insolvency, and secure transactions. Remove the application skill level content from bankruptcy and insolvency and secure transactions. That does that mean that they won't test it anymore on, test-based simulations?
Yeah, that's the sense I get, Phil. Right?
Yeah,
I think
so
that's
it
correct.
seems like
Yeah.
anything on multiple choice will be bankruptcy, insolvency, and
Yep.
secured transactions.
Mhm.
And the content covering the rights, duties, and liabilities of debtors, creditors, and guarantors, and the remembering and understanding skill level content from bankruptcy and insolvency and secured transactions will be combined in Group C. All right. There will be no longer separate topics in Group C. Now, what I suggest you do is this. All right. Go get a copy of the blueprints. If your course doesn't give it to you, which I don't know of any other ones that do, we integrate them in our books, but go to AICPA.org and type up, all right, blueprints in the search box, effective July 1st, 2021, all right, and here, look for the regulation one, and it'll show you the Group C and all that stuff, so you know what it means, all right. Now, Area 2, Group D, they removed the topic federal security regulations. So they said, this group will be renamed Federal Laws and Regulations. The CPA exam will continue to assess SEC reporting requirements in the FAR section, all right? So basically, what's going to happen to the SEC Act of 33 and 34 as far as regulation?
Gone.
It's gone, all right?
Yes.
All right, where is it, Ron?
So it's in FAR, basically, right?
Okay, all right.
No, basically in FAR now in the future.
All right, now the next thing says it limits the scope of the content to the basics of gift taxation and removes the content on estate taxation. All right, I don't want you to think they removed everything on estate taxation, because the last sentence says this. All right, the CPA exam will continue to assess concepts relating to the individual's tax basis of assets received from a decedent. So remember, all right, they're eliminating, how you compute the estate tax and the gift tax. But remember that, all right, if you receive property as a beneficiary of an estate, you have to know what your basis is in that property. And your basis is based on how they value the assets of the estate, which is either fair market value at date of death. If they do that, then your basis is fair market value at date of death. Or, all right, if they pick the alternate valuation, which is up to 6 months after, all right, which means they can distribute it from date of death up to 6 months. Whatever that date of distribution is on that date is your basis. So you have to know that. Now, here's one that I'm sure a lot of you are probably saying, why are they taking this off? It's one of my favorite topics, all right? They took off the alternative minimum tax for corporations. This year, they're taking off the alternative minimum tax for individuals. All right. Now, the next, all right. How many, you feel bad about that, Ron? I mean, actually,
No, to be honest, Phil, it would be a challenge for me to calculate that.
All right.
Yes.
Now, remove the analysis skill level content relating to net operating losses and capital loss limitations. The CPA exam will continue to assess net operating loss content at the application skill level. All right. That means that you could have a net operating loss. All right. And remember, if there's a carryback, all right, you have to carry it back, and you have to know the number of years how you're going to carry it back. And then after you finish carrying it back, then you carry it forward, right?
Yep.
All right. Yep. And that's actually a change because of the CARES Act.
Yep.
Now, also, remember when it comes to capital losses, all right? Capital losses, when we deal with, capital loss limitations, don't forget corporations can only deduct capital losses against capital gains. All right. All right. Now, for individuals, remember that a capital loss, the most you can take for net capital loss is how much per year? Married, filing, joint, single? 3,000.
3,000.
Right?
Yep.
All right. Now, the next thing is remove the topic. Income deductions, determination of the beneficiary share of taxable income. The content in topic 1 will become a separate group, trusts, and will focus on recalling the basic concepts dealing with simple trusts and complex trusts. So what's going to happen now is they're not going to give you the form 1041, the U.S. fiduciary return for a trust, which shows the income of a trust minus the expenses. All right. And then because a 1041 is actually a flow through entity, all right, you get a K1 for your share of the income from the trust if you're one of the beneficiaries. All right. Well, that's all gone, that 1041 stuff. But you have to know the basics. A simple trust is what? A simple trust is that they must distribute all their income in the trust during the current year. A complex trust is that they don't have to distribute all the income. All right. All right. And in fact, they can distribute some of it, none of it, or all of it. Okay. And then on this one here, they remove the topic, obtaining and maintaining tax exempt status. So you don't have to know what you have to do to maintain your tax exempt status. All right. And limit the scope to unrelated business income. And unrelated business income will be limited to assessing basic understanding of a tax exempt organization rather than calculating it. So you don't have to know the calculation of unrelated business income, but basically understand what it is. Unrelated business income is income that is unrelated to the tax exempt purpose for which that nonprofit exists. All right. And always remember this. All right. If you have a tax exempt organization where they have, for example, every year they do an annual banquet and they sell advertising in the journal at the banquet that they give you. All right. Advertising is always considered unrelated business income. Okay. All right. That's just a hint for you. And that concludes it. All right. So please remember this. All right. Make sure you look at these changes. All right. And we give you the summary changes to the reg exam. All right. We gave it to the FAR exam. All right. And please, and this is what really, I was listening to an interview of some guy interviewing another review course that I never heard of. All right. And you know what? He didn't say anything about going and, redoing the blueprints or anything. All right. In fact, no one knows about, hey, we got to integrate our books covering the blueprints. They don't. They just take the old material. They tell you about the blueprints and that's it. They expect you to take everything in their book and put it under the right blueprint. No, we give you the blueprint and we put the information you have to know under each blueprint.
And we go, Phil, we go blueprint by blueprint in detail to make sure we have adequate coverage so that when you see that blueprint and you see our information, you understand what you need to know.
Yeah, someone called me this week, Ron, from another course, because I always say you can call me even if you're in another course.
Yep.
And, all right, the person, I said, he said he took the exam. So I said, well, did you follow the blueprints? And he said, what's the blueprints? Okay.
Horrible.
That's very common. I hear that all the time. All right.
Very sad. Yeah.
Right?
Very sad.
Who's not paying a good service there?
Yeah.
The course providers who don't make you aware of the blueprints.
It's not good for reputation of the providers, for sure. Yep.
All right, everyone. All right. On behalf of Ron, thank you very much. And Phil Yaeger. All right. We have shown you the changes, the real changes, how they relate to the blueprints. All right. For the new exam effective July 1st, 2021. Remember, it's effective for July 1st, 2021. Before that, you use the old rules, the old blueprints, and they're also at the AICPA.org website. Well, thank you, everyone. Take care, and we'll see you soon.